There's a silence you notice when the news turns serious. You pick up your phone and see words that tighten your chest: conflict, mobilization, sanctions. You weren't thinking about money 5 minutes ago, but now you are. A quiet question paces in your mind. What happens to my money if things actually get worse? You don't say it out loud. Instead, you scroll faster. Gold is up. Bitcoin is doing something confusing. Stocks are red or green or both. And online, everyone sounds confident. But beneath all that confidence, there's something else. Fear. Not fear of war, fear of uncertainty. Most people assume asset reactions during war are about economics, interest rates, inflation, liquidity. But really, it's about psychology. Fear, control, identity, emotional triggers. Gold, stocks, and Bitcoin move not because spreadsheets changed, but because human behavior changed. In a crisis, money stops being about growth. It becomes about safety. Gold is the oldest of the three assets. It represents certainty. For thousands of years, people turned to gold when empires fell, currencies collapsed, borders shifted. Its power lies in doing nothing. That very stillness reassures the brain. In crisis, gold's silence is comforting. It doesn't promise growth, it promises survival. Stocks aren't objects, they're stories. Buying a stock is buying belief in the future, that companies will grow, consumers will keep spending, the world will keep moving. War interrupts that narrative. Suddenly, questions appear. Will production slow? Will energy prices spike? Will consumers panic? Stocks react not to facts, but to confidence in the future. Your brain fills gaps with worst-case scenarios. The reaction is fast, often emotional. Bitcoin is the odd middle child of crisis assets. Too new to feel historic comfort, too volatile to feel stable, too digital to feel tangible. And yet, sometimes it doesn't collapse during geopolitical tension. Sometimes it rises quietly. Psychologically, Bitcoin represents control. Gold protects. Stocks trust the system. Bitcoin quietly questions the system itself. In places where banks or currencies are unreliable, Bitcoin moves. Not perfectly, not without risk, but it moves. And that matters, emotionally. Now ask yourself, when you watch markets during war, what are you really seeking? Are you protecting your wealth or protecting your sense of control? Protection is quiet. Control is emotional. Urgent buying, selling, refreshing charts, this isn't strategy. It's anxiety dressed as finance. People buy gold because it feels safe. Buy Bitcoin because it feels independent. Sell stocks because it feels responsible. We call it smart investing. The market calls it emotional reaction. The real advantage in crises is calm. Financial media thrives on urgency. Calm investors often outperform. Instead of asking which asset wins, ask what role each plays psychologically. Gold absorbs fear. Stocks absorb optimism. Bitcoin absorbs doubt. Understanding this reduces panic. Try a small experiment. Wait 10 to 60 minutes before opening your brokerage account after major headlines. Let emotions settle. Ask yourself, is this new information or just noise? Structure your portfolio to avoid dependence on a single safe asset. Accept that perfect predictions don't exist. Rely on probabilities and patience. When the headlines feel heavier and markets begin their familiar dance of fear and doubt, you don't need to rush. Watch, think, pause. Gold moves, stocks hesitate. Bitcoin quietly shifts in the background. Real advantage isn't speed, it's composure. Wealth rarely grows from reacting faster. It grows from reacting less. Calm decisions compound. Security often grows in silence.